At some point, reality will replace fantasy in these markets. Right now, presently, the US economy is weakening. And for anybody out there that doesn't believe that, ask yourself, why are we going to see a rate cut this month in July if the economy is doing so well? The reason we're going to see a rate cut is because the economy is not doing well. The economy is weakening. It is slowing. And if we do not have a rate cut, the US stock market will seize up. It is dependent on the drug. It is dependent on its fix of another rate cut in order to function. And the minute the Fed stops cutting rates, the US stock market is in very, very big trouble. It's Monday, July 1st, 2019. Making a quick video today. Expect a rate cut of 25 to 50 basis points this July. If we do not get it, these markets begin to seize up. Also, we must have a rate cut. We're expecting one because bond yields are in the basement. So they have no choice, in my opinion, but to cut rates this July. You know, we've had this song and dance for over a decade now. Near 0% interest rates, quantitative easing, and over a decade. And here we are today with 11 years of rate cuts and quantitative easing. And these markets continue to beg for more. The only way these markets can survive is with quantitative easing and continuous rate cuts. But at some point, this is no longer going to work. And this is when the real big trouble starts here in America, when these markets no longer respond to the medicine. As a result of all this market manipulation, and with all this currency manipulation, there's a few things that I believe are coming to America that are not that far away. Please comment down below. Let me know if you agree or if you see other things in the horizon for America. But I believe we're going to see long-term interest rates rising at some point here in the United States. Inflation, massive inflation, I believe, is coming to America. The price of consumer goods will rise drastically. I believe that US dollar will be under severe pressure by other currencies. And I believe that the purchasing power of the average American is going to be greatly reduced. Comment down below. Do you agree, disagree? What do you see coming as a result of all this manipulation in these markets? In regards to what's happening right now, U.S. manufacturing hits 32-month low amid weakening demand. So we're at a 32-month low in manufacturing, yet this is the booming economy. I want you to take a second and think what this is all going to look like when this recession hits America, this Great Recession, this Great Depression, an economic downturn, a collapse. Call it whatever you want to call it. What is America going to look like? What are these sectors in real estate, manufacturing, automotive, lending, you name it? What are we going to be seeing in America when we actually admit that we're in a downturn? And we are in the beginning of one right now. Things are turning down as I speak. And this is, again, more evidence solidifying exactly what I'm telling you. How about this? Rent is becoming unaffordable for many U.S. workers. We basically have a housing crisis in America because people cannot afford to live. And we continue to see homeless numbers skyrocket. More and more people living on the streets of America, more and more people going hungry, yet we're paying for people all over the world to come here while we're giving them health care, while we're feeding them, we're giving them housing, we're giving them all this government subsidy, yet U.S. workers cannot afford to pay rent, and most people in America now no longer can even afford to buy a house. Yet our politicians apparently care more about foreigners than they do about the U.S. citizen. This is on Zero Hedge. This was on last night on Zero Hedge. Second highest number of S&P 500 companies issuing negative guidance on record. So we have the second highest number of S&P companies issuing negative guidance. Again, if it's this bad right now in this incredible economy, think about what you're about to see in the not so distant future, what is really going to be happening in America. And I want to talk a little bit about some real serious issues here in America that literally could blow the U.S. economy right out of the water, and nobody really talks about it too much. It's pension funds. This is, I mean, one of the most dangerous things here in America. So many people believe that they're going to have a retirement, 10 years, 15 years, 20 years down the road here in America. And, some people may not even have a retirement that they think they're going to have just a few years down the road here. American pension plans in 2018 were unfunded by $1.5 trillion. And for those people out there that think that things are great, things are rosy, it's blue skies, teddy bears, and puffy white clouds, I would be very, very worried if I was relying on my pension to be there for me when I retire. The average state pension plan assumes it will earn 7.15% investment year over year, every year, for basically ever. Before 2008, state pension plans were 14% underfunded. The average plan lost negative 24% in 2008, and it never fully recovered to today. That 2008 recession that took place that drained these pension funds has yet to recover. In fact, it's even worse now. Now the average state pension plan is 31% unfunded. So it was 24% unfunded, negative 24% unfunded in 2008 after the recession. And here we are now in this booming economy, and the average state plan is negative 31% unfunded. Take a state like Kentucky, it's negative 64% unfunded. How would you like to be in Kentucky, and depending on your pension 5, 6, 7 years from now to be there for you, likely these type of states are going to take haircuts. When you're retired, you'll probably be getting 50%, and you'll be lucky if you get that. Colorado, Connecticut, Illinois, New Jersey are negative 50% unfunded. So how would you like to be a state worker in one of those states? I believe that in many of the states here in America, at some point, these pension holders are going to be lucky to receive 50% of the retirement. And I believe that many of these pensions throughout America are just going to be annihilated. They're going to be wiped out. I think people are going to retire, and that pension that they thought was going to be there is not going to be there. And this is going to be life-changing, and I believe it's going to have astronomical effect on the United States of America, socially, politically, and economically. In 20 states, pension plans are less than 66% unfunded or underfunded. You have to ask yourself, what kind of risk are these pensions taking to ensure that they can meet future obligations? These pensions are heavily invested in these markets. We are now at all-time highs in the markets, and these pensions are most pensions here in the United States of America are unfunded. What is going to happen during the downturn? What is going to be the aftermath after an economic collapse in America, after a major recession or depression? What is going to happen to the pensions here in America? I don't think anybody really knows, but what we do know is it's not going to be good. And who's going to pay the price? It's going to be the pension holder, the guy that's getting ready to retire, the guy that is retired, the guy that's been retired, and he's living off his $3,000 or $4,000 a month pension or more. and then gets a letter saying that your $4,000 a month pension is now $1,500. It's going to be life altering, life changing, and we could really see people absolutely go out of their minds when their standard of living, their retirement, this whole Ponzi scheme is just taken from them. Listen, pensions are being robbed right now, Social Security being robbed right now, and I'm here to tell you that you need to be diversifying. You need to find alternatives to at least be protecting yourself when you do retire. Again, gold, silver, the two most undervalued assets in the entire world. SD Bullion, link down below. If you are in the market for precious metals, again, I've said this many times, I recommend SD Bullion. They've been solid, they're awake, they know what's going on. And there are not many options out there that you have other than the two most undervalued assets in the entire world, gold and silver. And they are continuing to be on sale during these good times. People are ignoring the importance of these precious metals. Again, I cannot reiterate this message enough. You cannot be holding just paper. You've got to be holding tangible assets. Your pensions are not safe. My good friend Aaron in Texas, he is in love with silver. He is in law enforcement. He understands that his pension may not be there for him in 15 or 20 years when he retires, whatever amount of time it is till he retires. But he understands it may not be there, and he understands that people in the same line of work are depending. They're so dependent. People are dependent on these financial institutions. They're dependent on these pensions. They're dependent on their bank. They're dependent on their government, that it's all going to be there for them. And he is not. And many people that are awake know better than to be dependent on any of these institutions, because when things get bad, we're going to see possible bailouts. What if we start seeing bail-ins? If this economy dumps and the stock market dumps, it's taking the pensions down with them. And so right now, with stock market highs, with this incredible economy that we're being told and that we're being sold, look at the amount of unfunded pensions in the United States of America right now, and you believe that they're going to be there for you. We haven't even hit the downturn yet. Wait till you see what is going to happen to the pensions. And this is my warning today. Be very aware if you're relying 100% on your pension, because I truly believe it is not going to be there for you. Most of your pension is not going to be there for you. And in some cases, there will be no pension waiting for you. So prepare right now, because tough times are coming to America. When these markets eventually take a dump, it is going to set off an avalanche of problems here in America. As I just spoke about earlier, pensions. Let's look at Chicago. This is a city buried in pension debt. Chicagoans are on the hook for $150 billion based on Moody's most recent pension data. Each Chicagoan household would have to absorb $145,000 to pay off this pension debt. Look at the numbers, and Chicago is just one city, and most of these Democratic-run cities are all in the same boat. 1/5 of Chicagoans live in poverty. Let me repeat that. 1/5 of Chicagoans live in poverty. That's 20% of the population of Chicago. Half of Chicago's households make less than $50,000 a year. Now, that's not $50,000 a person. That's $50,000 a household. Let me go over some of these numbers in Chicago, my hometown, this once beautiful city that now has become a war zone, that is now looking like a third world country. When we look at the income, household incomes, not individual income, but household income, people making less than households making less than $10,000 a year in Chicago, 10%. 10% of the households in Chicago make less than $10,000 a year. Households making $10,000 to $14,999, 6%. Households making $15,000 to $24,999, 11%. Households making $25,000 to $34,999, 9%. And households making $35,000 to $49,999, 42%. I mean, you have to ask yourself, how are people even surviving? How are they eating? How are they putting shoes on their kids' feet? I mean, these numbers are absolutely appalling to think a city like Chicago is this broke, and the people now, I mean, these are literally third world conditions in Chicago. They're trying a progressive tax scheme in the state of Illinois, and they're trying to pass this in 2020. And what it's going to do is anyone earning more than $250,000 in the state of Illinois, they're going to tax you 60%. This is why we see a flood of people running out of the state of Illinois, because of the high taxation, the high amount of crime, and the huge amount of debt. It is only a matter of time before the entire state is bankrupt. And what happens here? What is the government going to do when the state of Illinois is completely bankrupt? This is a completely broken state, and there are many other states following the same example that Illinois has set. And so we have so many states here and so many of our large cities in huge trouble. How does this all play out in the future? What's going to happen? Again, these states are invested in these markets. These pensions are in these markets. What happens when these markets have a hiccup? What happens when these markets collapse? What's going to happen to these states, these cities? It's disturbing when you really think about the amount of damage that is going to unfold here in America and states like Illinois. And what do they all do? They're going to go after the people with money. They're going to want the wealthy to pay for all the damage that they've caused, all the spending, all the wasted money. They're going to go after the rich. And what are the rich going to do? They're going to leave the state. They're going to take their money and they're going to take their business with them and go somewhere else. And it's just going to just ravage states like Illinois because of this progressive type thinking, this socialistic type thinking. I'm going to go on here. Chicago pension debts are now 12 times the size of its annual revenue. I mean, it's amazing that this hasn't already blown up. Tax hikes are not going to solve the massive debt problem in Chicago. And this is what they always try to do, is they're going to try to squeeze blood out of a turnip and make you pay while everybody else continues to go on with the party. Only structural reforms, including changes to the cost of living, are going to change things in places like Chicago. Again, high taxes, high cost of living, huge amounts of debt, huge amounts of crime. People just are not going to live in places like this. They're going to look at other options. Any pullback in the stock market will destroy what's left in Chicago's unfunded pension plans. It is a ticking time bomb. It is a matter of time. And we're going to see many, many cities like Chicago annihilated. And if you think things are bad in these cities now, if you think the crime is bad, if you think the debt is bad, if you think the taxation is bad now, you haven't seen anything yet. Wait till these markets get rocked. We are going to see massive fallout throughout America, throughout these states, throughout these cities. It is just a matter of time. And again, this is why you better be prepared. And if you don't have to live in these cities, I would certainly look at other options, because I wouldn't want to live in a city like Los Angeles or a city like Chicago when these markets collapse, because it is going to be very dangerous. So I'm going to wrap it up here today on this beautiful Monday afternoon, but I thought it was important to discuss with everybody out there the dangers of our pension system. And it's shocking why more people are not warning Americans about the dangers of the pension system right now, of these pension plans. And that I think the average American is not aware of how invested his or her pension is in the stock market, how tied in it is to the stock market. And if the market crashes, these pensions are crashing. And this is why I reiterate the importance of holding hard, tangible assets like gold and silver. I think it's a great idea to diversify if you have a pension, to make sure that you're not putting everything, your entire future, into that pension. Because if it's not there, what are you going to do? I mean, think about if your pension gets destroyed and it's worth zero or it's worth 20% of what you thought you were going to have, how will you survive? You have no insurance policy. And this is why I believe that gold and silver are the ultimate insurance policy. Again, I believe that we're going to see massive financial fallout across America, and too many people are unaware and unawake to the damage that is going to be felt when these markets collapse. It's going to take so many people's pensions, retirements, 401ks, you name it. It's going to take it all down. And so think a little bit about a strategy and a preparation for your future. These pensions now are being robbed as I speak. They're unfunded. They're tied into the stock market. We're at all-time highs in these markets. Your pensions, more than likely, your pension, the person I'm talking to right now, is unfunded. And so if it's unfunded right now at an all-time high in the markets, in a booming economy, where do you think it's going to be when things crash? Things will crash. They are going to crash. They are beginning right now. We are beginning this recession right now. And I ask every one of you, do not be a casualty to this economic tsunami that is coming to America. You cannot protect yourself entirely with paper. You're going to have to be holding hard assets. And unfortunately, too many people are going to wake up one morning and they're going to look at their retirement, they're going to look at their portfolios, and it's going to be missing a lot of zeros. And paper millionaires are no longer going to be millionaires. It doesn't matter what's on paper. What matters is what you're holding in your hand today. God bless every one of you. Thanks for watching. Have a fantastic week, and I look forward to talking to you very soon. God bless.